IRCTC is flagship Indian Railways company. While most of the railway stocks has given a very juicy returns in last 1 year, IRCTC has struggled to do so. Currently, the stock is trading at a PE of 50, which is well below its historical PE of 69. This warrants a question whether this is good stock to buy. So in this video, we'll break down IRCTC's revenue model into simple equations which will help us predict its growth trajectory. It will also help us to take an informed investing decision. Company has four revenue streams. Company earns money via commissions through sale of tickets on their website where they have its monopoly. They are into catering business. They also sell packaged water. Along with that, they have forayed into travel packages. In Q2 2024, company earned profit of 373 crores. Out of that, 73% came from internet ticketing, where they enjoy a healthy margin of 82%, while other divisions have much higher revenue but they contribute much less to the profit, primarily because the margin in these divisions is less than 15%. Therefore, internet ticketing is a very important division for IRCTC. Next, we will double click on internet ticketing. So essentially, ticketing revenue of IRCTC could be broken down into three simple parts. First, number of tickets sold by Indian Railways. Second, out of that, what percentage of tickets were sold online? Third, what was the commission that IRCTC earned per ticket? Now let's focus on number of tickets sold by Indian Railways. Between FY 2018 to 23, ticket volume has increased from 58 crores to about 66 crores. This means a CAGR growth of somewhere around 3.3%. On a daily basis, Indian Railways run about 13,000 trains. About 92 trains are going to get introduced in FY 2025. Two trains on a base of 13,000 is not much. So hence net we can expect CAGR growth on this variable to be somewhere around 3.5%. Let's examine next part of the equation, which is percentage of tickets booked online. So in FY18, 65% of tickets were booked online. If we look at FY 2022, only 80% of tickets are purchased online. In FY24, this number is about 84%. So mere 2% growth in a matter of 2 years. So this offline to online trend is maturing and it leaves a very less headroom for further growth. Moving on to commission per ticket. IRCTC enjoys healthy commission per ticket, but the fees has essentially remained the same since 2022. Being very close to the government, it has some policy risk too. For example, in 2021, government announced that IRCTC has to share 50% of its commission revenue with the government. Naturally, this was not a welcome news from an investor standpoint and hence share price took its beating. Government realized this and quickly reverted the scheme because of eroding investor confidence. To summarize, IRCTC's ticketing revenue is expected to slow down to mid-single digits, exposing stock to peak correction. Now let's shift our focus to catering division. Revenue from catering division could be broken down into three parts. Number of trains catered, percentage of passengers opting for the catering service, average purchase value per customer. So now let's double click into trains catered. So IRCTC as of now provide catering services to about 1300 trains. Out of that, 117 are prepaid trains. Given the government's push of adding new Vande Bharat trains, all of these trains belong to prepaid segment, which is one of the very lucrative segment. Hence, catering business of IRCTC is expected to grow handsomely. Being present in more number of trains is one thing, but the question is whether passengers will be opting for the catering services. There are mixed opportunities here. E-catering business where IRCTC ties up with certain food partners and deliver food directly to the passengers in the train is showing a good growth. At the same time, government is revamping the railway stations. Revamping of railway stations could hamper IRCTC's catering business because more food outlets would be available, providing customers with good options. So there are net mixed signals here. We can assume average purchase value to grow on an inflationary basis of about 2 to 3%. So net catering revenue is expected to grow due to more number of trains catered. Company's packaged water facility is running at a capacity utilization of 86%. They are doing capacity expansion of 15% to cater to the demand. Companies' tourism business, which caters to mass tourism, is at a very nascent stage and hence likely to contribute less to overall bottom line. Recent announcement by the government to reduce reservation period from 120 days to 60 days is expected to further put downward pressure on IRCTC's ticketing business. To summarize, ticketing is main business of IRCTC. Growth in this business is expected to slow down on account of maturity of offline to online trend. Catering business is expected to do well. Company possesses a significant policy risk. Management is exploring other avenues to bolster its growth. If you found insights in this video helpful, consider joining our YouTube channel for continued access to such content.